Again, I implore you to remember, f your puts, f your calls. Jay Powell has you by the balls. God bless my money printer.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. I hope everybody's having a fantastic week and setting up for a great weekend. Guys, all the trades we spent weeks setting up on the channel in the Discord are well into profit. NASDAQ's fallen 1,000+ points. S&P's fallen over 300 points. And of course, the Solana trade was a 45% winner. At this point, what a lot of people want to know is, are we at a base that we can hold and then wave up for that lower high to complete this retracement level, another opportunity to short and get further movement to the downside? We're going to examine that and look at that in the charts. Guys, if you want to check out our Discord, a freedom-seeking group of individuals, almost 12,000 strong, I'd love for you to do that. It is free for a month. That offer is limited time because we're working on a new website, and when it launches in the next couple of weeks, that offer will be gone. So you get our full gambit of services on our Discord, our TA, our live streams, the community, and of course, our trading ideas all are on the Discord. Message Lee in the Telegram. It's in the video description. He can help you join, and that offer is going to expire in a couple of weeks. Lee, without further ado, let's jump into the show. All right, let's start off on the 10-year. Guys, if you want to trade these Ponzi markets, I forgot to mention, check out SimpleFX and BingX. They will pay for your first month in this limited time offer now for our Discord. All that information is in the video description. Two fantastic exchanges to trade these markets on. Again, message Lee with any questions. Looking at the 10-year, guys, the yields have just been relentless. You're at 4.639, so 4.64. Where this is a line in the sand where the market will really freak out, I think it's going to be above 4.75. They'll think we're going back to 5. Remember, the markets were at their October low last time we hit 5, which is substantially lower than we are now, okay? So there's a lot of room still to move, but you need to watch this. You're at 4.64. The DXY is taking a breath. It approached and almost hit our harmonic target, the 106.59. We got just a hair short of that, and it's taking a breath, came back to support. We'll see if this stays subdued to give us a wave up. Larger picture, what are we looking at on the E-mini, right? The S&P. Remember, our prior retracement, I like to trade with market symmetry. This gives you signal waves in the market. When you're looking at the prior retracement, an 11% retracement, the historical norm going back 4 years in the S&P is to get one of these larger 8 to 10% retracements. And that usually triggers once you go beyond 5%. So in the daily chart, we're going to examine this previous retracement area to see if we're forming any type of fractal pattern as well, to look for this rebound, this reflexive rebound back to the upside, because you got it here. There's your peak. You sold off. You came back up. For all of those of you that are asking me, where can I trade next? Where can I trade if I think this is going lower? It's going to be that reflexive move back to the upside. And then you get your further retracement down to our target areas. Larger pattern, again, looking at the retracement coming down to the December high, which is 48.41, or down deeper, 45.85, which is your July 2023 high, right? So that actual targets are 48.21, 45.85. So again, we'll call it 4,800, 4,600. That is your fractal high there. We had the eclipse crash cycle we made videos about over the last couple of months. We've been talking about it. Typically plays out over an 89-day period, giving you a bottom for this retracement in late June. I have June 25th here on the charts, okay? And then if we get that euphoric FOMO back in the marketplace and nothing has broken yet in the marketplace, looking for the big wave back up, 58.35, just over 6,000, 6,082. And if not, we're going to make a lower high. And that's all she wrote, folks. And then you'll be descending with the incoming recession or with a financial accident, AKA a black swan that happened in the marketplace. Let's look at this on a daily, though. On the daily, we need to start off on the Dow, okay? Because the Dow is really important to pay attention to. Again, a mirror image of the S&P. Look where you fell to already. You fell to your December high. You actually got below your December high. Now the S&P and the Nasdaq are above their December highs. They're still floating up here relative to the Dow. The Dow came down. So could this mean we still have further to drop before we get what? Before we get a reflexive rally? At some point, you will get a reflexive rally in the marketplace. And again, if you believe there's further declines coming after the retracement, then that is where you would trade. You did it in the Dow over here. Here's your July high, right? Just look at the fractals here. Here's your July high. You came up, came down, came back up. This is a second trade opportunity. Then you sold off even further into your October low. That's where we are right now. The Dow really, really fell apart. This is a big move in the Dow, but you haven't got that reflexive rally back up on your 3-day chart. You're trading at 38,180 right now. Let's just see what that would be from a fib perspective. Get rid of these drawings. Pull this fib down from your all-time high down to this current low. You'd be looking at 38.8, 39, or 39.4 up to the 618. And if you came up to the 786, 39.819. Remember, we're in the middle or coming into the middle of earnings season. Big tech has yet to report. So it's going to be interesting to see what happens, but that's the next move that you want to watch is these levels higher up for that next potential trading opportunity. In which case, guys, I'm just, again, this is just we're just hypothesizing here. If we come back up, let's say 618, 39,395, and we do fail at resistance and break down, I don't think you're just coming back to your December high. I think that easily puts into play that deeper retracement, your July 2023 high, okay? That's that deeper level retracement, which I do believe then would carry through the rest of the indices as well. When you look at the E-mini, again, knowing where the algos are looking, there's your 20, you're below it. There's your 50, you're below it. You're trying to hold that 5,000 key psychological level. You're at 5,079 right now. But look relative to where the Dow is, look where you are, because down here, guys, that's your December high, 48.41. So the Dow's already sitting down here. It actually got below this. And the E-mini, the S&P is still up here, and so is the Nasdaq. So does that mean we could just keep stair-stepping down, coming down to this level? Or are we going to try to hold this level, wave back up, whether we challenge the 50 again or get above it, and then come back down again, giving us maybe a 3 waves to a bottom type pattern to catch up to where the Dow is? That's the unknown. That's what we don't know just yet. So what we want to do is just look at most recent previous larger correction. Let's look at our decline that we're at right now. So from our all-time high to where we got to, 5.37%, right? 12 bars, 16 days. Actually, let's move this over, capture a current day. 13 bars, 17 days. 13 bars, Fibonacci number, trying to hold a base here, right? Can we hold a base, wave back up for a lower high? We'll look at those targets. But we got 5.3% down. Let's look at this retracement. Let's get rid of these moving averages. How deep did we retrace at this high before we bounce back up for that lower high? That's what we want to look at. See if we get any type of symmetry here in the market. So we went down just over 6%, 6.14, and then we rallied back up. So let's see what that rally was. That rally was 5%. Okay, we fell just over 6%, rallied back up 5%. And then here's the key. What did we do after that rally? Did we fall again? A symmetrical move, another 10% down total from that rally high. So that, again, that's why that's a key move in the market. Let's look at this from a fib retracement perspective, from this high, your July high, down to that low before you came back up for the second top. You came up to the 786. You see that? Almost to 45.73. Then you capitulated. Then you fell down to your October bottom, lunar eclipse, Halloween. Market went on its parabolic rally back up. So you'd have room that you can still move down. You're at 5%. The previous retracement just took you just over 6%. So you could come down deeper. These don't have to match. This doesn't change anything if it matches, but it can give you more confluence for how deep you could go before you get this move, which I'm expecting expecting this wave back up to a lower high, okay? Because that's another trading opportunity in the marketplace after this nice 300-point winner so far. So we don't know if we're going to hold the support level or not, but we can look at where we are right now, the fib retracement on the daily time frame. Looking at this, I mean, if we throw the 50 back on here, because that's going to be resistance, obviously, if you look at the 50, that's right here at 51.56, right? 51.50. So that could just be a little baby wave back up. You're at 5,078. You challenge the 50, also your fractal base. You make a double top or whatever, you roll back over, and then you start completing this pattern. You pull back up, you roll back over, and you come down to this level. So again, what I would do, what I'm doing, if I'm not in an S&P trade right now, which I'm not, I'm in a NASDAQ short. But if this, I'm waiting to see if we wave back up or if we just start to completely fall apart here. But with earnings still ahead of us, it could be very binary. If the Mag 7 has good earnings, we're going to look at some of the Mag 7. If they have good earnings, they can prop this back up. But at this juncture, unless you get further decline, really start breaking down at this juncture after almost a 5.5% move down, I would like to see a retest at a minimum of this base of the structure and of the 50 moving average to see how price behaves right here, because this forms your Livermore pivot to the downside as well. So just something to pay attention to, guys. Let's look at the MFI. MFI is in bearish territory, but it's starting to flatten out on the daily. Momentum flipped over to bearish, obviously, but you're trying to hold this area. It's a battle right now. Looking at the NASDAQ, same thing, guys. I want to focus on this prior retracement level. NASDAQ targets that we're looking at, same bottom, June 25th, we're looking at for 16,786 or 15,885, right? Then we're either going to come up to our parabolic top here at just over 20,000. So 21,000, 21,500, giving us a 100% harmonic expansion in the market, or we're going to make a lower high. Lower high could look something just like this at 18.1 beneath your wave 3 high, okay? But I want to look at that retracement on the NASDAQ to see how far we fell prior. So this current retracement, we just went over 6%, 6.18%, right? So 6.18%, what did we do here? Before we came back up for this second top, this looks a little bit deeper. This looks like 7, 8%, 9%. So 9% retracement, then we rallied back up. So again, you could fall further. If you do market symmetry, here's your December high. That 8% move, 9% move takes you right back into your December high, just like the Dow. So you can see right now you're struggling here on the daily time frame, putting in some type of doji. Your last doji led to another big sell-off leg down. You're at 17,675 right now. If this continues to fall, look for the December highs and the indices to try to give you some level of support. If this can hold and you get a wave back up from your current low level, then you want to look at the 50, which is up here at 18,130, 18,150 in that area to provide resistance in confluence with the base of this structure, okay? Your fractal low of this structure. You want to see if this holds as resistance at 18,150, 618 at 18,267. It's too early to tell because you had the same exact candle prior on the daily time frame. A doji looked like you're going to try to hold a bottom and then another big sell-off, and now you're doing another doji. Who knows? Maybe that next candle tomorrow could be another big sell-off, taking you down towards that December high where the Dow is sitting and patiently waiting as well. Looking at the MFI, you're in bearish territory. There's plenty of room to go down still. Momentum is bearish as well. Let's move forward. One of the key stocks you have to watch is NVIDIA. Your fractal low is 830. You broke it today. You went down into the 820s, 824. You came back up. When you look at NVIDIA right now on the daily time frame, this just looks like a 5-wave pattern so far that's been playing out. So you have this pattern. Remember, topping patterns are 3 and 5 waves. 1, 2, 3, 4, and here's your 5th wave. If you can hold this area, stay above 830, you could see the oscillators. Let's look at your MFI. If it comes down, starts getting oversold, but you can hold this area, you could see the oscillators start to get that wave back up. The pendulum moves back up, and maybe that's how the markets get their higher low structures, get that wave back to the upside. It's just going to be really hard to do if you don't get the yields in the DXY to back off, right? Which is why we may bleed out continually to those December highs. But you want to see if NVIDIA can stay in this range above 830, below 974 and just chop and work off some of this condition, right? Work off this condition because you are bearish in NVIDIA on the MFI and in momentum. Looking at Apple, I mean, this is a three-wave pattern. This is nothing more than a big three-wave pattern here in Apple, big double top pattern. So here's your A, here's your B, right? Here's your C. Big three-wave pattern. What are you doing? Here's your fractal low. You're at 167. Your fractal's at 165. You're trying to hold this double top from breaking. Where's it going to go if it breaks? I can just tell you from a fractal perspective, 157 would be your next stop. If you want to check this with fibs for confluence, we can go down to that B point up to the C point. Look where your 1272 is, 156, right there at 157. Look where your 1618 is, 144. Puts you back in this cluster of candles. So if Apple starts breaking down below 165, it's only $2 above it right now. If it starts breaking down, watch 156. And again, this would be that further confluence to deepen that leg down to the December highs. Apple breaks down, if NVIDIA breaks down, that alone will pull everything down, right? You had NVIDIA be the big market winner, Apple the biggest stock. If they both continue to decline or can't hold these key levels of support, look for the markets to move to their December highs. Let's look at Tesla. Tesla is our harmonic favorite. We used to cover this all the time. Look at this big W pattern here, big decline from that W pattern. Here's another W pattern you have here in Tesla. So I'm showing you this to show you a couple of things here. If you want to see where Tesla fell to, we can go to this point here on Tesla, 3-day chart. 1618 is at 150. Where did Tesla fall to? 150, right? Off of our W, fell right to the harmonic target of 150. So Tesla needs to try to hold this level. And as you can see, this is also your fractal low here from this previous harmonic structure at 152. If Tesla can't hold this level and it continues to decline, guys, we're going to look at some of these broader targets, the larger targets off this larger W pattern. We can go down to this April 26th candle, pull it up to this high here. You're right at that 1 fib, the 152, that fractal low. Your next level down is 112, taking you back down into this structure. And ultimately, guys, if you look at your support structures, remember, all these markets, again, none of these companies are worth anything that they trade at, right? I mean, Tesla got up to a 400 PE and was over $400, right? So these companies, when you look at this, you broke this structure already below 167. And if you look at where Tesla was, where was Tesla back before the pandemic? February 2020. Look at this. It was at $64. What does that line up with? The 1618 at 6157. So whether Tesla can hold this area, if it comes back down, if it waves back up when the markets move up for a lower high before a deeper retracement, you want to see if Tesla can hold these areas. But ultimately, I've been saying this for a couple years now. You're going to see Tesla. You're going to see most of these companies after the completion of this market cycle with the recession go back prior to these levels here, prior to this massive stimulus and trillions put into the market. All of this will be given up and you'll end up back down here. I've been talking about $50 Tesla, $60 Tesla, and that's where it's ultimately going to end back up, is down in this range. Until then, you're going to have wave movements moving with the marketplaces as well, okay? So when we look at Bitcoin on a 3-day chart, guys, holding that 382, again, our retracement down here from January 22nd, pulled up to the all-time high, you're holding that 60K level. Now, when this does come down more, if the markets continue to bleed to their December highs, then look and see if Bitcoin, what we've been talking about, that higher level retracement, the 618 at 52K, which people were trolling me about back when it was up here in the 70s, like, it's not going to 52K. It can easily go to 52K, see if it holds. If we start moving back up, that's when we get our movement back up after our tops, right? And if it can't hold that area, it's coming back down. There's your 786 at 46 into this cluster of candles. This cluster of candles ranges from 41 all the way up to 48. We've been calling it 45, 46. So 52, 45, 46. Let's look at this on the daily time frame. Here's your fractal corridors. You are displaying a bearish bias right now. If you want to be back to neutral, get back here in the middle, right? Get back here in the middle. You want to be bullish, get towards the top of your fractals and then break out to the upside. But right now you're displaying a bearish bias, just as the markets are. And if you look at where 52 is, guys, you can easily see if the S&P and the NASDAQ, the Dow's already there, fall to those December highs, you could easily see Bitcoin come back down to this level. This level it's been in since February, right? It wasn't here very long, but it fell to this level. You could see it come down to this level and hold its base, right? See if it holds its base there, waves back up, maybe gives you a lower high. You have to see what the markets are doing. But I don't think Bitcoin's going to take off to our higher level projections, the upper 90s, the low 100s, until you see the markets complete their retracement, which they're not done yet, complete their retracement, and then move back up. So Bitcoin can try to hold this range. We shall see how successful it is. You're just underneath the median line. You're still bearish in the MFI. You're bearish in your momentum. But right now, you're holding the lower quadrant of this neckline. You can see it right here. If you're fractal low, next stop, if it starts breaking, is that 51, 52 range there for Bitcoin. You look at Solana. Similar concept, guys. Where did we fall to in Solana from a fractal perspective? Your December high. There's your December high. You fell to it. You actually got below it. This was a nice 45% drop from our trade entry, that 200 to 205. Got a nice 45% drop. If you want to bounce back up to the upside, when you look at this, if you zoom out too, right? If you look at this, this is a daily chart. This is why I like to look on the 3-day trend chart. You look at a 3-day chart. If you come up for a lower high, right? If the markets are putting in a bottom here and they start waving back up, you're going to see it in the markets. You're going to see Bitcoin try to wave back up to the upside, Solana try to wave back up to the upside, and these all become potential trades if you have that market view that there's further declines to come. If you don't, then you want to see it break this fractal and move to the upside. But this is how you get your larger 3-wave, 5-wave patterns. You got to zoom out. Larger patterns on larger time frames have much more power. Okay, and your neckline here would be the same in this situation. If Solana continues to fail, if Bitcoin starts to fall, you want to watch this cluster of candles because you'll be back in that range, in that cluster of candles. I can show you this on Fibs as well. Right now, we got to the just below the 2 Fibs. Let's go ahead and throw the 2618 on here. Throw 2618, see where that lines up at. Put you down at 94. So put you back down between that 94 and 100 range, back in that cluster if Solana continues to fall. But again, we need to see what the markets are doing, if they can hold up or if they got some more shedding to do, some more bleeding to do. Because if they do, you can see all these roll down a little bit further as well. If we look at Ethereum, same concept, guys. You're trying to get back here into more of a neutral stance on Ethereum. It's going to follow everything else. Here's your cluster of candles you could return to, which would be 2,000 all the way up to that 2,700 level. You want to see what Bitcoin does. And again, if you look at this, this is a 3-day chart. You already had a nice double top here. We covered this with Fibs extensively. I'm showing you here with fractals, but here's your double top. And now you're broke down. You're trying to rebound back up. One thing to watch is this can easily become, there's your wave 1. This is your wave 2. If you get a lower high rebound, you get what? 3 waves to a bottom, right? So another potential area you could trade Ethereum. So let's pull a fib here and see what we have on that level. If this is the bottom for right now, if we get a rebound back up, you want to watch 33.74, 35.31. Those are 2 levels you want to watch. See if those hold as resistance if you rebound back up for a further move down, right? Simple. So we'll see how it plays out. We got some time. ADA, of course, broke through our fractal corridor, broke through our channel. Same thing here on ADA, guys. Look back here. Your December, November highs, they're going to vary asset to asset. So your November high, you tested it, you wick below it, you pop back up above it. So if you want to see if this can bounce back up, if the markets can hold, if Bitcoin can hold, crypto can hold, the halving, all that excitement, whatever. If this pops back up, you want to watch that fractal base. You want to watch the outside of your channel, because what did you just do on a daily time frame? This is a 5-wave pattern, right? On a daily time frame, can show you this with waves, or you can just call it a head and shoulders. So whatever you want to call it, doesn't matter. The whole market is 5-wave and 3-wave patterns. Click there. Coming up, here's your wave 2, 3, 4, and then this would be your wave 5 if it came back up in this type of fashion. Head and shoulders pattern. If it broke back down below 40 cents, 41 cents, it would have further decline to go. So these are all things you want to watch. This should answer some of your questions about what's the next trade. The next trade is going to depend on the market. Are we holding support, rebounding back up for potentially lower highs? We'll know when we get to resistance. Or do we still have more bleeding to do before we can hold support and then rebound back up? Tune in Monday for the next video. Hope everybody has a fantastic weekend. I'll talk to you guys soon. Take care, everybody.